All right, so I had a very good week. I had a very good week. Just from, like we've been talking about, understanding that this strength indicator and only trading these pairs. Like these are some deadly pairs, bro. Like EU and GU correlating with everything else. I mean, I really don't need to know anything else to trade anything else. Anything like, any other pair. Because if I have the strength indicator and I have DXY, I have the direction and I have the strength. So I know which one would be the better sell and which one would be the better buy. Before I even get on that, I want to look at this NAS trade I had this morning though. It was a beautiful cloud. So it's crazy because I'm watching this happen. I'm just like, okay, you have this imbalance. Matter of fact, I think it was on a 5 minute. Yeah, you have this up candle, this last down candle, right? And it just like sprung up basically, and it left this little imbalance. And as they preach, buying below the New York Open in bullish conditions, this is clearly a bullish condition, right? It's clearly bullish. This is clearly bullish, right? So this is when price and time kind of comes into play, because look at this is at 8:30, which is New York Open. The push down, right? If you buying below the open, this is New York Open, buying below the open in bullish conditions. I got activated, right there. I'm looking forward to fill in an imbalance all the way. I think it's over here. Ain't nothing over there. Oh, there it goes. It's right there. Bam. And you can see just the push up, the last push up before the huge down movement. So just knowing that mitigation theory, that would be my next point of sell, but I know it has to make it up there. So that's, it reacted off of it. You got another good sell, but it could be coming up to just bust through it. I didn't even get in it. I don't even want to get in it no more, to be honest. But yeah, and actually realizing that which one was the better buy, SP 500. Oops, no, go back. Oh, that's right, SP 500, US 30. Understanding which one was the better buy. If you're just looking at, this area right here, right? Bam. You got one going down. You got another one going down. But here, this is going up. So understanding NAS is going to be the better buy here because it's holding the structure. Look at the structure it held. These didn't hold their structure at all. You know what I'm saying? So that's indicating, strength. So understanding that's going to be the better buy in the situation. So that was just a nice little clap right there. A nice clap. Just watching that at the New York Open. It's pretty amazing. But yeah, that was a nice clap. But let me go over the setups I had this week. I had a nice, let me get that off the screen. I had a nice GU sell, which I sent out to the chat. Going off the last candle. You had the imbalance right there. All right, and right? And you had this last candle. Oops. This last candle. Make that red. Right? And it actually touched that last candle by like, I don't know, barely. And it just melted off the face of the earth basically. So that was a nice, setup there, just playing off that last candle and understanding that, price is falling. Price is giving you a break of structure here. It broke this low right here. So that's indicating that the market is, is getting weak. But understanding that they left an imbalance right there, they need to fill back up. That's where we get in because we know the banks sit right there behind that candle to go lower. So that was a nice clap. EA, I closed this position about, I think right here. I think it gave me the 1 and 3. It closed itself. That was a nice clap. Just seeing, the last up candle sweep liquidity to the left side. Right, took that money. Where's the next money sitting? It's money sitting below this lows, right? So that's your target. And I was looking at the strength indicator as well. I think this is when it was like around this area or somewhere. It was weak around some area around there, but it gave me the move I wanted. That was a good 48 pips, which isn't bad. I was risking 16. Playing off that last up candle. Put my stop right above this high because I expect for the market to respect this candle right here, and it did. Came right into it, touched it by like 1 pipette probably, balanced itself back out. They close up that buy position just to trade lower, take out that money that was sitting right there. It's beautiful, beautiful, beautiful. So I think GA, I sent out GA as well. It was a nice move. Just looking at the last up candle, it swept liquidity. I love it when it just does this. This last candle. So the banks are in that area, in that price area. Oops, right, bam. That last push swept the money. Bam. Where's the next money sitting? Below all these lows. All those lows right there. And the market just fell off the face of the earth. So if it would have held that position, we've been up 146 pips. And I had this imbalance mark for it to come in there. It could respect it, but it didn't respect it at all. It just traded right through it. That's a nice clap. That's a beautiful position right there. And that was only 15 pips. I mean, just seeing that it created liquidity, but it kept its structure on the upside. It had a little sweep to go up to take out this consolidation. Where's the money sitting? Bam. It gave me my first sign of weakness. It had to fill up this imbalance right here. Got in the imbalance. It just melted after that. So that was a good setup as well. EA, I got clapped on EA actually. I had a sell limit. It didn't give me what I wanted. But I'll talk about it, because losses is just as important. think I had a sell limit in here. I don't know, somewhere in there. It gave me a nice little, I was trying to ride it down to this imbalance. But it looks like it wanted to go hard, and it did. Took me out. Should have just waited to play the last up candle. That's the last little push. But, you know, that's a clear lesson, not a loss. This one I was waiting for it to get up there. Never did. It never did though. It was a good sell week. Everything was selling off. I deleted this trade. I wasn't actually not in it, but it still looks good, to be honest, because it's still respecting this area, like the body of the candles, because you know we were taught that the wicks matter, but the bodies really matter, because if it's respecting, you know, if price is closing below a certain point, then that's showing signs of weakness. It's not able to go higher, and that's just, you know, just looking at price action, to be honest, and seeing what the candles are forming you, and how the candles are forming and what they're telling you, you know, paying attention to that. But this still doesn't look bad, to be honest. If it respects that high, then, you know, this could be a good trade to take out that low. So 20 pip. I deleted that though, was not in it. I was looking for that. Didn't get that. But I seen it happen. I wasn't sweating it though. I was already in a couple trades. First break of structure right there. All right. That's the structure. That's the break of structure. All right. This is a mitigation zone, because that's when it first started, right? That's when they first started pushing it down. You gotta come back up to that point, right? You put your stop at the high, 16 pips. Put your TP at a low. And, you know, that's a 5-to-1 trade. 16 pips definitely gave it to you. And that was you know, you could watch that. You could have seen that. What time this happened? This happened like 11 o'clock? 22? What's 22? I think it's like 10. I think it's 10 o'clock. But it gave you the re-entry at what time? London. Another re-entry right there. Popped up. This is buying above the open in bullish conditions. It's clearly bullish. So, you know, that would have been a nice clap, but didn't make it up there to my point, but it is what it is. And that's pretty much all the trades I really took. I had a EU sell that was called out. I think it was right here, maybe. I don't know where. I think it was right here. Stop was at the high. Took me out. So overall, I was like, you know, like 6 for 2 for the week or something like that. Something, I don't know, like maybe 5 for 2 or something. But the market was moving good. I shouldn't have played this one, because I knew, you know, just looking at the strength indicator, that EU was bullish, you know, very bullish. Even though the DXY, what's the DXY showing us? It was even showing us it was melting. So clearly that wasn't a good sell. But, you know, all our, you know, lessons we learn from all of them. So yeah, that's pretty much all I really got.